Welcome, and thank you for joining us for our second in a series of 3 videos about the Accounting Changes and Error Corrections Exposure Draft. The goal of these videos is to help you understand different aspects of the proposal and to give you a new way to provide input to the board by filling out a survey with questions about the proposals. In our first video, we covered how the categories of accounting changes and error corrections would be described. In this video, we will discuss the proposed accounting for each of those categories and how those events will be displayed on the face of the financial statements. Our final video will discuss proposed note disclosures about these events. So on to the accounting. Changes in accounting principle are proposed to be reported retroactively by restating financial statements for all prior periods presented. This means that a government would restate their beginning net position to reflect what it would have been if the newly adopted principle had been applied in prior periods. The board believes restatement is appropriate because the effects of changing how a transaction or other event is reported are not attributable to the current period and should not be reflected in current period flows. In contrast, changes in accounting estimates, the second category of accounting changes, are proposed to be reported prospectively because the board believes these changes are the result of a change in circumstance, new information, or more experience. This means the government would report the effect of the change in the period in which the change occurs. The third category of accounting changes is changes to or within the financial reporting entity, and those changes are proposed to be reported by adjusting beginning balances of the current period as if the change occurred as of the beginning of the reporting period. And finally, error corrections are proposed to be accounted for retroactively by restating all prior periods presented. As with changes in accounting principle, the board feels the effects of an error are not attributable to the current period and should not be reflected in current period flows. Moving on to display in the financial statements, the board is proposing that the aggregate amount of adjustments and restatements of beginning net position be displayed on the face of the financial statements for each reporting unit. The board believes this display will help users understand the magnitude of the accounting change or error correction and allow them to more easily determine whether they need to obtain additional information. Existing literature does not include specific display requirements, which has led to diversity in practice. Users of financial statements value easily understandable information that is presented consistently over time and across governments. The board has attempted to do this with the accounting and display proposals and would like your input as to how well they have succeeded. You can do this by first watching the 2 other videos in this series. Then you can consider providing input on the proposals by answering the questions in the survey or submitting a comment letter. Finally, tell us whether you thought this video was helpful in describing the proposals by sending us a note to the director's email. Thank you very much for your participation and your engagement in helping to make accounting standards better.